Every July, something happens across Canada that most people never hear about. Thousands of low-income seniors, people who were receiving the guaranteed income supplement, sometimes over $1,000 a month, suddenly stop receiving it. Not because they did anything wrong, not because the rules changed, simply because their tax return was not filed by April 30th. And once those payments stop, there is a strict legal limit on how much can ever be recovered. Miss enough time, and some of that money is gone permanently. Today, I want to make absolutely sure that does not happen to you or anyone you care about. And stay with me until the end, because I am also going to tell you about a free service that will file your taxes for you at no cost, available in communities across Canada, specifically for seniors in this situation. Welcome. My name is Martina, and today we are covering two closely related topics. First, the GIS, what it is, why it is so critical for lower-income Canadian seniors, and the one administrative trap that causes payments to stop every single year. And second, the bigger picture of how Canada's old age security program is funded, what the real long-term pressures look like, and what practical steps every senior can take right now to protect the retirement income they depend on. This is not about fear. It is about being informed. Let us start with the most urgent issue. The Guaranteed Income Supplement is one of the most important monthly payments in Canada, and one of the least talked about outside the seniors who receive it. Here is how it works. If you are 65 or older receiving OAS and your income is below a certain level, the government provides an extra monthly top-up called the GIS. For a single senior with very little other income, that top-up can be over $1,100 a month. Combined with your basic OAS, it can bring your total government income to over $1,800 monthly. For millions of Canadians, particularly older women, widows, and people who worked in lower-wage jobs, this is the primary source of financial security in retirement. But here is the thing most GIS recipients do not fully understand. The GIS is not permanent. It is reviewed every single year. Every July, Service Canada resets the eligibility for the GIS based on the income information from your most recent tax return. If you filed your taxes by April 30th, the information is there, the review happens smoothly, and your payments continue without interruption. If you did not file, even if your income has not changed at all, even if you owe absolutely nothing in taxes, Service Canada does not have the information it needs to confirm your eligibility, and your GIS payments can be suspended in July, sometimes reduced, sometimes stopped completely. This happens to real people every single year, not because they are dishonest or careless, simply because nobody explained this clearly enough, or because life got in the way, or because they thought, I have no income to report, so why would I need to file? The answer is that the filing itself is the trigger. It is not about what you owe. It is about giving Service Canada the information they need to keep your payments going. Filing with nothing to report is still filing. And it is absolutely necessary if you receive the GIS. Has this happened to you? Or do you know someone whose GIS payment stopped unexpectedly? If so, keep watching, because I am going to walk through exactly what to do to get them reinstated. Now, here is the part that genuinely concerns me most, and it is something I want you to understand clearly before we move forward. If your GIS payments stop because you missed the April 30th deadline, you can eventually get them restarted once your taxes are filed. But here is the critical detail. Canadian law limits how far back the government can pay retroactively. You can only recover GIS payments going back 11 months from the date your return is finally processed. 11 months. That is the hard ceiling. What that means in practice is this. If your GIS was suspended in July and you did not file your taxes until the following October, 15 months later, you cannot get back those first 4 months. That money is gone. It cannot be appealed. It cannot be recovered under any normal circumstances. For a senior receiving over $1,000 a month, 4 months of lost GIS is over $4,000. Gone permanently simply because of a filing delay. This is what I call the annual review trap. The system is set up in a way that seems reasonable on paper, verify income annually, renew eligibility each July. But the consequences for missing the filing deadline fall entirely on the senior, often without enough advance warning. And the people most likely to miss the deadline are the very seniors least equipped to navigate the consequences. Those with limited literacy, those without internet access, those managing health challenges, and those who simply do not know the rule exists. Let me introduce you to someone. We will call her Diane. She is 73, lives alone in a small Manitoba community, and has been receiving OAS and GIS for 8 years. Her income is modest, OAS, a small survivor benefit from her late husband's pension, and a little interest from savings. She has never owed taxes in her life. Because of that, she stopped filing tax returns a few years ago. She figured there was no point. In July of that year, her GIS stopped. She did not understand why at first. She thought it was a banking error. By the time she spoke to someone at Service Canada, 2 months had passed. By the time her taxes were filed with help from a community volunteer, it was October. She received back payments, but only for the 11 months prior to when her return was processed. The 2 months before that, roughly $2,200, were gone for good. Diane is not unusual. She is careful, intelligent, and did her best with the information she had. She simply did not know the rule, and that lack of knowledge cost her over $2,000. So, what do you do if your GIS has stopped? Let me walk you through the steps clearly. The first and most important thing is to file your missing tax return as quickly as possible, even if it is late, even if it is very late. The sooner it is filed and processed by the Canada Revenue Agency, the sooner Service Canada receives the information to restart your GIS. The longer you wait, the more of that 11-month window you lose. If your payments have already stopped and you need to speak with someone right away, call Service Canada at 1-800-277-9914. Have your social insurance number ready, along with your income information from the previous year. If you have a spouse or common law partner, have their SIN and income details available too. Service Canada agents can sometimes begin the review process based on income information you provide over the phone, which can speed things up while your tax return is being processed. There is also a form worth knowing about. It is called the Statement of Estimated Income After Retirement. This is for situations where your income has dropped significantly. Maybe you recently retired, or a pension ended, or your circumstances changed during the current year. If you use this form to report a lower estimated income for the current year, Service Canada can recalculate your GIS immediately rather than waiting for next year's tax return. That can mean a meaningfully higher monthly payment starting right away. Many seniors who have recently seen their income drop do not know this option exists. Now, let me come back to something I promised at the beginning: the free tax filing service available across Canada for seniors in exactly this situation. It is called the Community Volunteer Income Tax Program, and it is run through the Canada Revenue Agency in partnership with community organizations across the country. Volunteers, trained by the CRA, prepare and file tax returns for free for people with modest incomes and straightforward tax situations. Seniors 65 and older are a primary target group for this service. So are people with disabilities and low-income families. The service is available in person at seniors centers, libraries, community health centers, places of worship, and shelters. In many communities, there are also virtual options where a volunteer works with you over the phone or online. And in some locations, you can simply drop off your documents and pick up your completed return a few days later. If your household income is under roughly $35,000 as a single person or under $45,000 as a couple, there is a very good chance you qualify for this free service. In Quebec, the equivalent program is called the Income Tax Assistance Volunteer Program. If you have been putting off filing because you find it confusing, overwhelming, or you do not have internet access, please reach out to your local senior center or call 211, the free national helpline, and ask about volunteer tax clinics near you. Filing your taxes does not have to be something you navigate alone. Now, let us zoom out for a moment, because I want to give you the broader picture of where OAS and GIS fit in Canada's retirement system and why staying informed about the long-term health of these programs matters. Here is something that surprises many people. The CPP, the Canada Pension Plan, and the OAS work very differently from each other, even though both send money to Canadian seniors every month. The CPP is backed by a massive investment fund. Right now, that fund holds over $650 billion in assets invested in markets around the world. It has been reviewed by independent government actuaries and confirmed to be financially secure for at least the next 75 years. When you receive your CPP, it is backed by real invested money. Your CPP is about as secure as any pension can be. The OAS is entirely different. There is no fund behind it. Every dollar paid to OAS recipients today comes directly from today's Canadian taxpayers. The government collects income taxes, and a portion of that money flows out as OAS payments. This means the health of the OAS is tied directly to how healthy the Canadian economy is, how much tax revenue is being collected, and how many seniors are receiving benefits at any given time. Right now, the OAS is financially stable. The government's own actuaries project that the program is manageable even as the baby boom generation retires over the next decade. But the pressures are real. The number of seniors receiving OAS will grow from about 7 million today to nearly 10 million by 2035. The ratio of working-age Canadians to retirees is shrinking, and Canada's federal deficit has been running significantly higher than projected, which reduces the government's financial flexibility. Does this mean OAS is going to be cut? Almost certainly not in the short term. The program is politically untouchable and deeply embedded in Canadian social policy, but it does mean that the long-term shape of the program, who receives how much, at what age, under what income conditions, is subject to future political decisions in a way that the CPP simply is not. That is worth being aware of as you plan ahead. Let me share a few practical things you can do right now to protect yourself regardless of how the political environment evolves. The first is the simplest and most important. File your taxes every single year by April 30th, no matter what. Even if you owe nothing, even if your income has not changed. Filing is the trigger that keeps your GIS, your GST credit, your provincial supplements, and now the new Canada Groceries and Essentials benefit all flowing. One filing protects multiple streams of income simultaneously. Missing it risks all of them at once. The second thing is to understand the OAS clawback if your income is higher. If your total income from all sources, CPP, company pension, RRIF withdrawals, investment income, goes above roughly $95,000 in a year, the government begins to recover your OAS at 15 cents per dollar above that line. For many seniors, this is not a concern, but for those with larger RRIF accounts or multiple income streams, it is worth being aware of. The key protection here is your tax-free savings account. Money withdrawn from a TFSA does not count as income for the OAS clawback test or the GIS income test. Using your TFSA strategically in years when your income might otherwise spike is one of the most effective ways to preserve your full OAS entitlement. The third thing, and this is especially valuable for those still deciding when to start their benefits, is to understand that both OAS and CPP grow significantly the longer you wait. Every month you delay starting OAS past age 65 increases your payment by 0.6%. Wait until 70, and your OAS is 36% higher than it would have been at 65 permanently for the rest of your life, fully indexed to inflation. The same principle applies to CPP, where waiting until 70 gives you 42% more than starting at 65. These are the only sources of retirement income most Canadians have that are both guaranteed for life and protected against the rising cost of living. Maximizing them provides real security against the uncertainty of living a long life. Let us bring it all together. The GIS is one of the most important monthly payments available to lower-income Canadian seniors, and it is also one of the most vulnerable to a simple administrative mistake. Missing the April 30th tax filing deadline can cause your GIS to stop in July. The longer you wait to fix it, the more of those payments are permanently lost, because the law only allows 11 months of back payments. If your payments have stopped, call Service Canada immediately at 1-800-277-9914. File your taxes as quickly as possible and ask about using estimated income reporting if your financial situation has recently changed. If filing your taxes feels overwhelming, the Community Volunteer Income Tax Program offers free tax preparation for seniors with modest incomes. in communities across Canada. You do not have to do this alone. The broader OAS program is not in immediate danger, but it faces real long-term pressures that make it wise to build your financial security around more than just government payments. File every year. Use your TFSA to protect your income test results. Consider deferring your OAS and CPP if your health and finances allow. And stay informed because the retirement landscape in Canada is changing, and the people who navigate it best are the ones who understand the rules. Your income in retirement depends on knowing these things, and now you do. If this video helped you understand something about your GIS or OAS situation that you had not fully grasped before, please share it with someone who needs to hear it. So many Canadian seniors are at risk of this exact problem, and most of them have never been told clearly enough how the system actually works. And if you are not subscribed yet, please do. We publish new videos every single day covering Canadian pension updates, benefit changes, tax strategies, and practical retirement guidance, all in plain, simple language without the jargon. Tap subscribe and turn on the notification bell so you never miss a video that could protect your retirement income. Thank you so much for watching all the way through. Take good care of yourself, and I will see you tomorrow.